welcome to the Money Control live stream. I'm Sonal Mehrotra Kapoor. Now, if you opened the newspapers this morning or spoke with anybody who's been tracking inflation numbers, the past couple of days have been very interesting. The headline at the moment is that for the first time in 8 years, RBI has let the inflationary number breach its tolerance levels. I'll tell you why I'm saying let it breach. I'll also tell you what those tolerance levels are, how are they decided, and most importantly, when all these announcements are made, numbers are flashed, how does it impact your and my life? Inflation, we know, impacts everybody's life, but how do you decode the discussions that are taking place between the RBI, the government, inflation figures, all of that with my colleague Dinesh, who's joining us now. Hi, Dinesh. How are you?
I'm good. How are you? Good
Good.
afternoon to all our
I'm very
viewers.
glad. Yes. Welcome to our viewers. Quite a few of them actually standing by. We've got quite a few people waiting in to see what you have to say. This is, like I was telling you, Dinesh, sort of a mini master class, if we can call it that, on just trying to understand how these inflationary numbers that come in actually work. But we won't go into the macro very detailed. We'll try to dumb it down for our viewers now and make them understand that why is it such a big deal, and importantly, now that, after, like I said in the opening, that for the first time in 8 years, for three consecutive quarters, we've had RBI let the number of the inflationary tolerance levels actually be breached. Okay, so before we begin, just want to give this quick update to our viewers. Because of this breach, now a meeting is taking place, and as we speak, a lot of discussions are going on between the government and the RBI to how to settle in on this number and what justification to give, etc. But Dinesh, if we can simply make people understand first what these inflationary number tolerance level actually means. From what I understand, and please correct me if I'm wrong, uh, for a period of 5 years, the government and the RBI come together to say this is a number at which the inflation is going to circle around. That number from August 2016 to March 2021 was 4%. That the RBI and the government both agreed that the inflation will circle for the next 5 years around this 4% number, plus minus 2%. So this
Correct.
plus 2%, which is 6%, becomes your tolerance figure, right? So now, if you could explain to our viewers how crucial is this number not to be breached and why it is such a big deal that's happening.
Thank you for that very nice introduction, Sonal. I think you have got all the facts correct, except with one part. RBI hasn't let inflation breach for three consecutive quarters so far. 2 quarters have gone by where the target is above the tolerance level. The third quarter is what we are in right now, which is July, September. Let me give a brief background for those who may not be familiar with the inflation target framework. Till 2016, it was the RBI, the banking regulator, which is also the monetary policy authority, which was deciding the inflation targets and the corresponding monetary policy action. In 2016, India formed a separate mechanism, what we call the Monetary Policy Committee, or MPC, as we commonly see in the media. The MPC came into place in 2016. From that point onwards, it became MPC's job to track inflation and maintain inflation within certain limits. So between, as you rightly said, between 2016 and 21, the target was 4%, which is a medium term target, plus or minus 2% on either side, which makes it as 2 to 6% band. In
Yeah.
2021, the this target is given by the government to the MPC, and MPC by the act, it is required to keep the inflation within that band. Again, from 2021 to 2026, that is for the next 5 years, the government extended the same targets for the MPC to follow, which means we are in
I
the
see.
ever since MPC started its was created, this is the second 5-year period. Now, what is so sacrosanct about this target? As you know, inflation is not just a macro number, Sonal, as we all know. It impacts the common life in a very close and very hard way. Because in a country like India, where your income levels do not go up so soon, and as in the developed countries, and also the rate of unemployment is very high. On one hand, you have your income levels either stagnant or job losses, take away the earnings of households. On the other hand, when inflation, which is, put it in simple words, it is an indicator of prices of goods and services in a country. You pay whatever you buy from a market, in terms as goods or services, you pay a price. So inflation is an average indicator of that price levels in the economy. So it is highly important to keep price rise within targets. Otherwise, what will happen is that for something you used to pay 100 rupees with your earnings, now you will have to pay 150 rupees, whereas your income is still the same. So you get, you have to pay more for the same stuff. That is how this impacts the low-income households the hardest, because it's not so much an issue for the wealthy and the higher upper middle class, but for the bottom of the economic pyramid, their income levels are stagnant, so their house budget gets squeezed, and their ability to purchase goods and services
Right.
becomes cut. Now, coming to the target
Yeah.
part to your question, the framework mandates the MPC to target 4%, that is plus or minus 2%, that is 2 to 6% at all points. If there is a failure for 3 consecutive quarters, one quarter refers to 3 months of a financial year. So
Yeah.
if the target is breached either below 2% or above 6% for 3 consecutive quarters, that is, 9 months, MPC is deemed to have failed in its government parliament given mandate. Now, if we look at the current scenario, in the March quarter, the inflation, when I say inflation, I mean the retail inflation. We have two types of inflation, that is consumer price index
Yes.
based inflation, which is retail
Yeah.
inflation, and the wholesale inflation, which is WPI. So for the March quarter, the CPI inflation averaged at 6.34%. And for the next quarter, that is April, May, June, it averaged at 7.28%. So 2 quarters have gone by where the inflation has clearly way above the inflation target to upper band of 6%. Now we
And
are
the
in the third
prediction
quarter.
is that the next quarter, yeah, yeah.
This quarter, that the quarter we are in, which is July, August, and September, we already have the
Will
numbers
also
for
be.
July. That is 6.7%. July inflation has already come out. Now, for the next 2 quarters or so, the forecast, RBI's own forecast is for the July-September quarter, inflation will average at 7.1%. 7.1%, that means, which clearly is an admission that 3 quarters will go
It's breached.
above
It's gone
6%,
beyond.
and the target
Yeah.
is breached. And why this is important? Because this will be the first time ever in the history of MPC that such a situation is happening, that MPC is
Has
failing in
happened.
its mandate. That's about the
Yeah.
structure. Yeah,
Yeah. So this is
yeah.
a very clear cut, as simple as it can get explanation on what these figures
What is
actually mean
structure
and
is.
what this entire. Yes. And the Monetary Policy Council that is there, committee is there, how do they actually work? Now, the point is, now that we know that this breach is going to happen, right? What will they
Yes,
do now? From what we understand is that the RBI now has to give a written statement to the government,
yes,
to Parliament, in fact, explaining why they could not retain or perhaps hold back or
yeah,
control the inflation within the limits, right? Now, I don't want to get into
yes,
technicalities of how RBI
yes.
manages inflation and what they do, etc. It gets a little complicated for people to understand. I want to
No,
know,
it's not so
is there
complicated, Sonal. It's not very complicated. RBI
like
manage.
information?
Sorry to interrupt you.
Hmm,
Sorry to interrupt
hmm.
you. RBI
No, no,
manages
please.
inflation mainly through controlling demand. The only tool the RBI has to manage inflation is to either make money costly or make money, cheap. When RBI makes money costly by hiking interest rates, which is what we track in the monetary policies, the interest rates, banking system will be forced to pass on this higher interest rate to the end consumer, which is when yours and mine home loan rates, auto loan rates, etc.
Yeah. So for me,
goes up.
when you say that, in my head, I go more cash in hand, less cash in hand. Right? For me,
To
that's
pass
how the
consumer,
situation,
and
the consumer,
they will,
that's how the
yes.
situation
So
tosses.
when rates go up, yes. So RBI cues are passed on to the banking system and it goes to the general public. So when rates go up, typically borrowers borrow less because higher interest rates, nobody wants to take home loans, auto loans, etc. So when the demand goes down, it automatically, theoretically brings down the inflation because there's no
Okay.
demand. Now, if the money becomes cheaper, you tend to borrow more. When you borrow
Yeah.
more, you tend to spend more as well because you borrow money
Right.
for something, right? You spend. So when the spending goes up, demand goes up, that automatically fuels inflation. So I was just explaining how RBI controls inflation. Yeah.
Yes. Okay. Okay. So that's good to know. So can we come to the next part now of the thing on what happens now?
Yeah.
What will RBI say? Because that's going to
So
be key, right? On what will RBI tell the government
yeah.
why it couldn't keep inflation under the limits?
Yes, I think you yourself explained the answer in parts, Sonal, in your introduction, that it's not technically correct to say RBI. I mean, MPC will have to explain because MPC is
Yes.
the Monetary Policy Authority. RBI is part of MPC. So MPC has 6 members, out of which, including the governor and deputy governors. Apart from them, there are 3 external members. So that is the constitution of MPC. RBI is the
Yeah.
lead party in the MPC. So when the inflation is breached for 3 consecutive quarters, the MPC will have to, write to government explaining the reasons for failure, that why they could not control inflation within the band 2 to 6%. Also, it's just not enough to explain the reasons. They will have to also give a roadmap to as to how to bring down the inflation back to the target, that is 4% plus or minus 2%, which is basically 2 to 6%. So they will have to explain a roadmap and a plan of action to bring down the inflation to 2 to 6%. So now that it's almost certain that they will breach the target, I suppose the MPC will have to meet very soon, as you said, to draft their response to the parliament. Now it's up to the government whether to accept the logic of failure, the reasons that are given, and also it is again up to the government to accept or not the solution,
Got that. Got that. Yeah.
the
But
roadmap
Dinesh,
they will be giving
what do you
to
think?
bring down the inflation. Yeah,
What do you think? So, what matters
yeah,
to you and me in this story, really, apart from the best of
yeah,
the minds in the country understanding how to control?
yeah,
What really matters to
yeah.
you and me is that what does this mean in the current? What do you think is going to happen as a consequence of this breach? And what are the measures that now the MPC will recommend to the government that could be implied? What are the ways in which they will again try to keep inflation under control? And what will that mean? What will be the impact of it on the consumer?
Sonal, the consequence of inflation breach has already happened in the society. Inflation has stayed far, far above the desired levels for too long, and it's already impacting us. Just RBI MPC going to government, admitting failure itself will not have any impact on you and me, the common man. because the impact has already happened in the
Hmm.
form of high inflation already stayed
Hmm.
above 7 months above the 6% and 34 months above the medium term target. So we are already paying the price
Hmm.
of high inflation. So
Hmm.
just because of this action, that is MPC writing to the government, will not have any immediate impact.
No,
The
so where
impact
I'm
is
coming
already there.
from is
Now to answer,
so far
yeah,
the measures that RBI,
yeah,
MPC, etc., were putting to control inflation, with the cost it had
yes,
on you and I, did not bear results, right? So it's only going to get more aggressive.
yes,
So I'm trying to
yeah,
understand in
yeah,
the times to come what holds for us.
well, I think it's going to, we'll have to live with high inflation for at least what my sense is, because
Hmm.
I think I explained how RBI controls inflation.
Hmm.
That
Hmm.
applies to, inflation can be triggered by demand. When the demand goes up, RBI can intervene and hike rates and cut demand. But unfortunately, the current round of which is happening right now is primarily triggered by external factors. It's not so much about what is happening in the domestic economy. We have a very volatile
Hmm.
global economic situation that actually, has caused a upward spiral in global commodity prices. And also you have
Hmm.
interest rates going up very rapidly all across the world, and particularly in the US. When interest rates
Hmm.
goes up, interest rates
Yeah.
were staying down all this period because of the pandemic, and central banks across the world were pushing stimulus through low interest rates and additional infusion of money. That period is over.
Hmm.
Now the interest rates going up
Hmm.
means the interest rate
Hmm.
window, why the foreign investors don't have any incentive to put money now in emerging markets, because in safer markets, in developed economies, interest rates are going up.
Hmm.
So that external outflow will happen. I think it's already happening. So what is
But
causing inflation at
despite
this
that,
point
look
is
at the way,
high
yeah, but despite that, look at the way the markets are responding. We've
you
again eaten.
yeah, yeah, it's sometimes it's very difficult how the market moves because
All right, we
too
seem
much
to
of
be
links
losing
with
that
what is
signal
happening on the ground.
with the nation. While we sort of fix that, I will encourage all of you viewers watching right now to send us some questions. If you have some specific things that you want Dinesh to sort of shed light on, please write into us as well. Also, this is a good time to remind you, please like, share, subscribe, and press that bell button on our YouTube channel so that you know every time we have these conversations and how exactly to take that forward as well. Okay, I think Dinesh is back with us on a good line. Dinesh, I hope you can hear me this time.
So no, I was just yes, yes. I was just saying, my limited point is that the inflation right now is not entirely triggered by the demand side problems within the Indian
Hmm.
economy, but because of the global
Hmm.
issues, global factors. So RBI has
Right,
very
right.
limited control over
Hmm.
the current inflation spike. So
Huh.
probably they will explain to the government these factors. In the letter failure, they will say that the inflation is currently
Hmm.
triggered by mostly global factors, and RBI has very limited powers to influence those factors.
Yeah. Or have any control or any sort of sense there. Right. So the
Yeah,
takeaway
very
from this,
limited control. Very limited. Yeah.
yeah, from this conversation, Dinesh, is that inflation is here to stay. And this
Inflation is
is things.
yes.
And for how long? Can I put you in the spot there and say, tell us how
So the
long?
yeah, yeah. So the RBI expects inflation to ease, by next financial year.
Hmm.
It's. I mean, they expect it to come down to 5%, the CPI inflation, by
Hmm.
Q1, the first quarter of next financial year. But let me tell you, Sonal, the
23.
problem with RBI forecast is that we have seen,
Hmm.
too often that these forecasts going wrong, because
Hmm.
there is a strong view that RBI reacted too late on inflation this time around. They continued with their so-called accommodative stance, which is a stance that is intended to support growth post the pandemic for too long. So the easy money stayed for a considerably long time, which actually caused an inflation spike, which added to the inflation problems. So the RBI could have acted earlier. The inflation situation would not have worsened to this level. So I believe maybe by next financial year we will see inflation coming down a bit, but lot of it will depend upon what is happening outside India, rather than what is
Right.
happening in our country. We are a country, okay? We don't decide our foreign institutional inflows cause a lot of yeah. So we'll have to see global factors how they are playing out.
All right. So the first quarter of 2023 prediction is 5%. Will that actually happen? Will there be some easing of inflation there? But I mean, I just want to say that out loud, Dinesh, that this is a
Yeah.
nice conversation. This has been a nice mini masterclass. I hope it was helpful for our viewers as well. I'm also understanding finance through this journey, and it'll be nice to take our viewers through this journey with me and try and decode all these fundamental questions that actually impact your and my pocket, right? So if you have any further questions,
Yes.
please do write into us. You can tweet to us. Our handles, our Instagram accounts are all out there. And tell us what you want and when you want Dinesh back with us so we can talk more about everything that's happening with the RBI, with the banking system, and overall with the economy as well. This was a pleasure, Dinesh. Thanks so much for joining us.
Thank you so much for having me, Sonal. Thank you.
Thank you, guys. And before we leave, please do remember, quick time to tell you, please like, share, subscribe, leave your comments, and please do remember to press that bell icon. Bye.